Alrighty people, welcome to the Fox7 continuation indicator introduction video. Now, before we get started using the indicator and how to set it up, the most important thing you need to be doing is pre-market or the end of the current day's session before market reopens at 5 p.m. Eastern. You want to do your level markups because without any knowledge of where price might want to go, if you just blindly take every indication that the indicator gives you, you'll probably lose about 70% of the time. So I will run through what the strategy looks like, but before anything else, we want to go by these levels that I have listed here. Now, disclaimer, everyone uses their own different window times. These are just the ones that it's based on my data, my mentor's data over the last 5+ years. And these are the levels that work with the indicator. As you can see, what's most important is the session liquidities, so the Asia highs, the London lows, etc. And if you have other confluences like equal lows or equal highs that line up with the general direction that you want to go, or where you want to see your entry model come into play, the more you have to that direction, the stronger the trade will be. And so, for example, the equal lows and the London lows for the 7th of July were the main draws, since London high got taken when the new week opened, but it didn't go to Asia high. So the fact that it didn't go to another strong draw, which was pretty much in the same general direction as London high, it wasn't that far away. The fact that that other high level, we'll call it buy side liquidity, was ignored is your first indication that price is going to be going down. And why it's going to go down is because of London low and equal lows. And you can see once the equal lows were finally taken, we had a sharp rejection back to the upside, which later on, around the 9th of July, took out Asia high. So in a case of finding an entry with the indicator that's saying go long, with the context that London high was what was swept and Asia high was ignored, we wouldn't really want to look for long setups. We would want to wait for the indicator to call short setup. So that's what I mean by needing to mark out levels and knowing how to read the market. All the indicator is doing is marking out a sweep of a candle's wick. Now, this is programmed to detect every sweep, and I haven't had the heart to change it in case I mess up the indicator. So we're going to primarily focus on session sweeps and 15-minute swing lows and high sweeps with equal lows and equal highs as extra confluences to take the trade in whichever direction. The indicator itself is then marking out a pre-long or pre-short entry because it's detecting an inversion fair value gap. So that's a bullish gap that gets inverted to the downside, and then a new bearish gap, which we are looking to be respected. And if those two things align with the direction that you want to go, then I would take the trade based on the indicator. So we'll run through the model quickly. I'll show just a candlestick pattern just to explain it, and then there'll be screenshots linked, hopefully in a link somewhere when I post this indicator, which will be in our Discord group. So you can see screenshots of what potential there is, because once you mix this with the 15-second and 30-second time frame, you end up getting really cool sniper entries with gold not needing any more than 2 points stop loss, and NASDAQ pretty much getting away with 10 to 20 points, which 20 points is the most I risk anyway. So again, I've rambled on a bit too much. Let's get into some examples.